with us. My name is Anthony, and you're still watching Financial Markets. And now moving into our top stories that have made headlines over the weekend. Of course, Bank of Baroda, which is one of the listed companies here in Uganda, shut down one of its subsidiaries, which is known as Baroda Capital Markets Uganda Limited, on auction in order to avert further financial bleeding. The Uganda Securities Exchange listed lender disclosed through its annual report, that is 2021, that its stock brokerage firm, which has been classified as assets of disposal group, returned a loss of 182.93 million Ugandan shillings, which is about $48,000, just as of last year. Subsequent to year end, the group decided to seize and liquidate the business of Baroda Capital Markets Uganda due to poor performance on a year-on-year basis. Management is committed to disposing of the assets and liabilities of the subsidiary, according to the bank. The group owns about 100% equity in the subsidiary, engaged in brokerage of securities and share trading. It has decided to kill the business and move out. Last year, the bank's net profit grew by 8.23% to 90.23 billion Ugandan shillings. That's about 23.81 million US dollars. From about 83.37 billion, that is 22 million in 2020, while total income increased by 5.74% to about 209.21 billion Ugandan shillings. That's 57.86 million US dollars from 207.31 billion in the same period. Its total assets grew by 3.61% to about 2.18 trillion. That's about 575.44 million US dollars from 11 trillion. That is actually from 2.11 trillion, which is about 556.96 million US dollars. The lender operates 17 branches in the country after opening its 17th branch in Arua town 2021, giving its presence in the northwestern part of Uganda. This year, the company hopes to increase its total income and investments in government securities by 10% and connect more retail clients to open central securities depository accounts for more participation in the secondary market. That is a story there from Bank of Baroda, Uganda. Remember, this company, of course, had a subsidiary known as Bank of Baroda, Baroda Capital Markets Uganda Limited, and it was a stock broker licensed by, of course, Capital Markets Authority. But at the moment, the company says it has shut down this subsidiary following year-to-year losses in the company from this particular subsidiary. And definitely this has led to its closure. I think starting last week, they have closed and run out of business, and they're not operating anymore as a stock broker. So the Baroda Capital Uganda, Capital Markets Uganda, is no longer a stock broker, according to, of course, reports from Bank of Baroda. But the bank itself says it has, of course, been able to be more profitable this year, and they will have their annual general meeting on 26th of August to approve the dividend they declared about a couple of months ago of about 25 billion Ugandan shillings. That is Bank of Baroda for you, and we move now to Uganda Clays, which is also another listed equity on the Uganda Securities Exchange. Uganda Clays Limited is considering expanding its operations across the region to shore up revenues and generate decent returns to shareholders after its net profit jumped 21% to 5.9 billion Ugandan shillings, which is about 1.55 million US dollars in 2021. Now, the building materials manufacturer, which is listed on the Uganda Securities Exchange, in its annual report 2021 says it is looking to expand across borders to Kenya, Burundi, northern Tanzania, Congo, and South Sudan. They say they are making moves to expand regionally, and that Kenya is 3 times the size of the economy of Uganda. So there is great potential there, and they are eager to get into the Kenyan market. They say also they will be onboarding agents from Kisumu and Mombasa, according to Mr. Reuben Tumwebaze, the firm's managing director. There are also prospects in Burundi and eventually in northern Tanzania and Congo, as well as South Sudan. And they say they are taking cautious approach due to the instability of the latter two, that is Congo and South Sudan. And they, however, say there is great promise in these economies. And they say that their goal is to have presence across the greater East African region. Now, Uganda Clay's expansion is part of the firm's 5-year strategy plan that seeks to generate 72 billion Ugandan shillings, which is about 19 million US dollars in revenues by 2023, and a customer satisfaction rating of 90%. The firm has embarked on extending its kiln with the belief that the projected revenues would be realized based on the volumes of tiles and bricks produced. The firm has singled out the extension of its kiln in Kamonkoli as one of its key projects to improve their volume by about 35%. They said they will also invest in an automatic press to eliminate a lot of defects during production, as the firm said. In 2021, the firm's net profit grew by 21% and is to about 5.9 billion Ugandan shillings, which is about 1.55 million US dollars, from about 4.9 billion, which is about 1.29 million US dollars in 2020. Directors recommended a dividend of 1.35 billion to be issued, which is about 356,354 US dollars, translating to 1.5 shillings per share. That is about 0.0004 US dollars per share. The works will enhance production capacity, quality, increase revenue, profitability from a higher performance culture. Definitely, there is Uganda Clays there expanding its wings. Remember, on the market, Uganda Clays is sells about 19 cents, just about 19 cents, for your own information. And if you would want to buy shares in the company, all you have to do is, go and get an SCD account through your stockbroker, and you can start buying shares in Uganda Clays. As you have heard, they're planning to expand according to their financial results. Also, they made a profit, and they are hoping to share a dividend of 1.5 cents per share of every 1.5 Ugandan shillings per share of every share for every shareholder who is in the company. They actually give back to their shareholders. Now, moving on to the next story, moving to Kenya here, the boss the new MTN CEO, Miss Sylvia Molinge, of course, faces tough times in a sector as he takes up her new office. When Miss Sylvia Molinge, of course, takes over as a chief executive officer at MTN Uganda on September 1st, she will have her work cut out. Her appointment comes at a time when the country's business environment is turbulent, and specifically telecommunications sector that is grappling with increasing operational costs from high fuel prices, depreciation of the shilling, inflationary pressures, and persistent power outages. According to the outgoing CEO, Mr. Wim Venhalput, these factors will continue to impact consumer spending as well as input costs for the business. The growing cutthroat competition has seen MTN Uganda shed a significant proportion of market share to 47.5% last year from about 60% 5 years ago to rivals like Airtel Uganda, Uganda Telecom, and Leica Mobile, despite maintaining the market leader position. However, its subscriber base has been growing year on year to 16.7 million mobile users in 2021. In a survey done by, of course, the regulator, that is the Uganda Communications Commission, the last year, 5 leading telecom companies failed the test of service delivery, and with many recording drop calls. Irene Kagwa, who is Sewankambo, who is the acting executive director of the Uganda Communications Commission, said cybersecurity and data protection threaten the trust and confidence of users of communication services. Towards the end of 2020, a major hacking compromised the country's mobile network, and the hacking was blamed for a security breach on a consumer finance aggregator, Pegasus Technologies, affecting bank to mobile wallet transfers, according to a statement by MTN Uganda. That year's Uganda Police Annual Crime Road Safety Report showed more than 41 billion Ugandan shillings, with about 11 million US dollars was lost through cybercrime. Charles Mbire, who is the MTN Uganda board, said that he would like to welcome Miss Sylvia Molinge to MTN Uganda. He believes that her experience will be beneficial to MTN, particularly given her alignment to their strategy intent of leading digital solutions for African progress. Mr. Mbire said the board is confident that Ms. Molinge will continue growing the company as a leading provider of telecommunications and digital solutions. Ms. Sewankambo Kagwa says that Uganda Telecom service providers also have to improve the quality of service delivery, and as drop calls persist on some networks. She cited musts as being key to coverage and quality of service. Ms. Molinge will have to address the issue of growing number of scammers, even as market players adopted the industry practices such as the multi-factor authentication, or the OTP plus PIN and password. Actually, this is the problem, and it has been happening across the world, even in developed countries such as the UK, Australia, and United States. Raising awareness, of course, is thus the key to fight the fraud. Last year, Mr. Yolanda Cuba, MTN Group Vice President in charge of the Southern and Eastern region, on a visit to Uganda, said that the group's operations face low data penetration in Uganda. That is definitely a story from MTN Uganda as we watch out for the new chief executive of MTN Uganda, Miss Livia Molinge, who is of course now from Safaricom, and she will be taking over from Mr. Wim van Helput, who has been the CEO for quite some time, for about the last 6 years. And definitely these will give us a few, a little bit of a different touch on MTN, and seeing how the tough economic times we are facing in have affected the coverage, the kind of mass coverage of the network, as many people, of course, are facing inflation and various economic problems. We will see what Ms. Molinge has to offer in terms of business, increasing business, MTN in Uganda, and also given that the company is listed now on the exchange, definitely very many people are looking out to see if they can invest in MTN as the future profitable company, with very good future prospects. That's definitely a story we will be following up on. Now, World Bank, in another story, has actually wants government to intervene in terms of price increase. Government must adopt targeted interventions to support vulnerable Ugandans, according to World Bank. Now, speaking at the 19th Economic Update in Kampala yesterday, Ms. Mukami Karuki, who is the World Bank country manager, said that whereas there is a scarcity of resources and challenges of debt, it is crucial for government to adopt targeted interventions to support the vulnerable, many of who have been severely affected by an increase in poverty. However, she said that the debt and inflation must be managed well. Whereas the government is not planning to distort markets in responding to the rising commodity prices, targeted interventions are required to arrest the increase in poverty and food insecurity, especially in vulnerable population groups, as shocks are becoming more frequent and more intense. Building shock-responsive social protection systems at the national level has become a critical priority, according to Ms. Mukami in a statement. The call comes at a time when rising commodity prices, which World Bank said poses serious challenges to economic recovery, continues unabated. Government has previously said it cannot intervene in especially control of commodity and fuel prices, which have almost doubled since the beginning of the year 2022. The surge, according to government, is a result of global factors that are outside the government's control. However, Bank of Uganda noted that government's intervention is likely to be constrained by the limited fiscal space due to scanty in revenues, project execution challenges, and rising public debt vulnerabilities, as well as the different other external factors. Government is expected to close the 2021-2022 financial year with a revenue deficit in excess of about 2 trillion. Now, this poses a serious challenges on a number of commitments, among which include debt repayment, which has grown above 72 trillion to about 73.8 trillion. Therefore, Ms. Mukami said such challenges are likely to impact on how government intervenes to support vulnerable groups that have largely been affected by an increase in poverty. The World Bank also noted that The rising commodity prices and the overall increase in cost of living pose new risks to livelihoods that had just begun recovering from the effects of COVID-19. These and other shocks are threatening to stall socio-economic transformations, thus increasing the likelihood of people falling deeper into poverty, according to Ms. Mukami, noting that economic growth had largely remained fragile due to multitude of risks, with optimism regarding expected acceleration of growth and a clearer outlook of the oil production being dampened by the new global shocks. Therefore, the World Bank noted that there was need to pay attention to some priority areas, among which include acceleration of COVID-19 vaccination to avoid the resurgence of COVID-19, targeted intervention to support the vulnerable, acceleration of efforts to invest and institutionalize the development of a national social registry for the vulnerable households, and strengthening or expanding of the digital payment systems to allow efficient and transparent distribution of support. The World Bank has also urged government to adopt a cautious monetary tightening in the face of rising inflation pressures, arguing that monetary policy must maintain a delicate balance between curbing inflation pressures that have intensified due to rising commodity prices and stronger demand for following the reopening of the economy, and supporting the private sector and the economy to remain on the recovery path. That is definitely a story there from the World Bank, encouraging government to actually do something about some of the things that we are seeing on due to inflation, and also intervene as government, in terms of policies and in terms of helping those that are most vulnerable. Remember, the central bank rate was increased from 6.5 to 7.5%, and this, translated into increase in the commercial bank rates, and definitely many businesses suffered as well there. Definitely, this also was aimed at, trying to control the inflation, and seeing that we see a little improvement in terms of what people can afford and what they cannot afford, especially in terms of fuel and basic needs like food. And so we hope that government will actually come up with solutions in terms of what can be done about the current situation concerning the prices. Now, we look at some of the cryptocurrencies here on my screen. I see cryptocurrencies have been in green, but most of them were in red by the close of the weekend. Cryptocurrency in particular went below 20,000 US dollars to trading about 19,000. Ethereum also is about 1,000 at the moment, 50, and Binance Coin at about 216.96 US dollars, while XRP at 0.316787, and Solana is at about 32.96, and Binance USD is at about $1 US, and we haven't seen such a depression in terms of prices of cryptocurrencies as we are seeing right now, with very many investors running for their lives. Definitely, crypto is not at its best at the moment, but we will watch and see, because the enthusiasts say you buy until you wait for it to go up. You wait, it will always go up. That's what some of the enthusiastic people in crypto say. But in Uganda, I just want to remind you, that's a disclaimer, that transactions of crypto, from cryptocurrency to mobile money, were apparently banned, and that is not yet lifted. So you cannot transact crypto into mobile money. But you can use it to buy or maybe purchase other things, but you cannot use it to buy the Ugandan currency at the moment. That, of course, was our news updates. We will go into a short break. We'll be right back. Don't go anywhere.